Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to show you a trade setup in First Solar. Avi has trade ideas, and he's going to bring you analysis on silver. And I'm going to bring you some of the best and worst stocks based on our analysis. I'll review 15 stocks in total. And then I'll bring you my analysis of the stock market with looking at the S&P 500. And we'll look at whether this rally will continue to fly.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market gained ground again this week, extending the strong rally of the previous 2 weeks. Gains came despite the hawkish talk from Fed heads. Collins, who early in the week came out and said 2% inflation may take longer to achieve, and then Kashkari came out and said that it is possible that there'd be no rate cuts in 24. And even with all that talk and weak earnings in Disney, which fell 11% on Tuesday, the market would not break. It was super strong. And on Wednesday, as the market went down pretty hard in the morning in those Fed comments, it only sent the indexes down, 20 points pre-market, but as we saw all week long, downticks lasted only a few minutes, and buyers are waiting. Thursday, there was another overnight weakness. Same story after a big jump in jobless claims came, and then buyers stepped back in. Seemingly bad news, of course, is good news. Friday, well, it really wasn't quite the bad news is good news story, as the market was strong again, moving up as worldwide equities were quite strong. But the consumer sentiment came out weaker. That you would think would be bullish. But then inflation numbers that are built into that were stronger. And Fed Bowman came out and he said the central bank should proceed carefully and deliberately. Still, there was buying in the market around, and even with that, it turned the S&Ps from slightly over a 20-point gain to just a few points a gain here as we do this recording right around the midday period. So the stock market correction that we expected in April came and went quickly. Our downside target was a loss in the S&P 500 of between 5.3% and 8%, which would be quite a modest corrective period. And actually, the S&P 500 fell 5.9% at its worst level. Now, our work says that that corrective period is very likely over. And while there's still a good probability there will be some pullback into late May, the same timing as we had before, were that to occur, well, that should be a good buying opportunity, and you'll probably get a higher low than we had at that April bottom. Later in this show, I'll show you all of that, and I'll show you the targets for the S&P 500 for a rally into the summer. We've talked about that summer rally for many, many months, and we still think that's coming, though the beginning of that rally looks like it started just a bit earlier than we expected. And you'll enjoy seeing our market condition monitor and how our indicators turn positive as this market has moved up, indicating the brief and shallow correction that we saw was likely over. For the week, the major indexes gained 1.5% to 2% here at midday, Bond market 30s up about a quarter point on the week. The 10-year yields fell just a little bit. Now they're at 4.48% on the TNX. That's what we look at, is that ETF. And we're expecting that to fall to about 4.35% over the next couple of weeks. That would represent a bond market rally that we think is coming on the short term. Gold soared. $65 to the upside, very much in line with expectations, though maybe just a little bit earlier. Silver, 86 cents to the upside so far. Both of those just really look like there's a lot more upside to come. The miners, which we've been super bullish on, the miner ETFs, especially SIL, SILJ, GDX, GDXJ, they're starting to catch up. There's a lot of bids been coming in. And you might have noticed while the gold and silver market was falling, they really were not giving a lot of ground. And they're well behind in here. And you could see gold and silver just edging up or holding, and the miners continue to do well. Dollar, small gain for the week. We're expecting that in the next 4 or 5 weeks, it's going to fall down to about 103.60, somewhere around there. And that, of course, will be good for the metals, because as the dollar weakens, then the metals generally go up. Oil gains $1.50. That's bouncing right now. We had a target for the near term down around 76. It actually got pretty close to that and bouncing. And I think it's going to go down through June, and you're going to see 76 or lower into that June period. That's the opening. We have so much in here to show you in this video. I want you to make sure you go to askSlim.com and make sure you subscribe and share that with people, and you follow us wherever you can. If you're new, get acquainted at askSlim. Sign up for level 1. That's 3 months for just $45, and you're going to get our analysis on the markets every single day. On YouTube, subscribe to this channel, click the notification bell, and do like this video. Give it a thumbs up. And on X, follow me at askSlim. Questions that you might have about what we share, which is just a tremendous amount of information and education, write to Matt at askSlim.com. Here comes Harvey. You'll love this.
This is an askSlim trade idea video walkthrough for a short-term long in silver futures. The ETF is obviously the SLV. And what we see here in the silver futures is, as we highlighted on FutureSpeak, the bull flag that's forming here, it's pulling back into the gold corrective low. There's a daily low that's due in both gold and silver, and I like the basing that's happening right now in silver. And this is really poised for another pop back to the upside, and we'll be looking for that to happen very shortly. If you shift over to the daily chart, what I like about this pattern, if we go back to hide the drawings for a second, again, I'm just trying to focus on the price action, and off of key troughs, you can see just in this visible space here, the higher low that formed, then we turned up. The higher low that formed, and then we turned up, right? Go back here, the higher low that formed, then we turned up. Go back here, the basing period, this is all a base, but the higher low that formed, and then we turned up, right? This looks like it's trying to do that exact thing. This is a possible higher low, okay? So this is it right here, and we're going to be watching to see if this can base and try for higher. I like the action in silver for that reason. We have not had a turn up yet in the trend. That needs to happen, but this is looking constructive. And if you overlay the drawings now, this is the that same 46 bar in silver and gold. And there's a low that's due here as well. So what I've done here is slightly different, just giving a little bit of a wider band, let's call it. Basically anchored right around the highs for the day as of the time of this video at 11:08 a.m. Eastern time. So it's 27.68 to this level right here, which is 26.83. Where did that lower level come from? Again, that's drawn from this minor cycle low to the high. So that's the 61.8, the minor 61.8, drawn from that low to that high right there. That's the minor 61.8. The upper end is basically the range that I'm seeing here on the upside in the silver market. So basically right around here is where I'm going to be looking at silver to hold. Now, this is not a classic trade idea for me. As you know, I like to play trends that are already moving. This hasn't done so yet, so this is a basing trade setup, and that's why we're getting a little bit of a wider band. And this one will take a little bit more time to prove itself, right? But there's still a plan associated with what needs to happen. I need to see over the next couple of days this turn back to the upside and show some life, and see that trend turn positive, see the RS on the daily turn positive. And I'm also watching the 4-hour bull flag. I want to see that breakout on the upside on the 4-hour. Okay, so that is what I'm looking at quite closely. And it's important for it to hold this low at 26.25, which is a possible cycle low. There was a low that was due here for 16.253, and you can see we did form that tail twice here, right around that same level. So if it loses 26.25, this is going to be a loser, and we're looking for a move. I just wanted to note the 61.8. It'll be really the first scale spot here, but then there's the 78.6 and the old highs, so 29.37. That's the old highs at 30.22. Okay, so that's the setup here in silver. And again, the ETF is SLV. If you have any questions, feel free to reach out. Thanks again, and have a great day.
Okay, Katie, show them this great analysis on First Solar. She's going to show you also how to combine that analysis using option strategies that she's going to show you on the platform at Tasty Trade. Make sure that you do sign up for a Tasty Trade account. It's a fantastic platform. Use our site. She's going to show you how to do that, and you will help us, and you'll also get special bonuses by opening up an account. So watch for her to show you how to do that at Tasty Trade.
Hi, this is Katie with askSlim. This is Trade Planning with Options on May 9th, 2024. Today I'm going to show you an options trade idea in First Solar. Ticker symbol is FSLR. First, we have our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. Let's get started by reviewing the analysis for First Solar. This is the weekly chart of First Solar, and we have two sets of cycle brackets here. The black cycle bracket represents First Solar, and it is 26 bars in length. The gold cycle bracket represents TAN, that's the solar ETF. Now we have these vertical blue dotted lines on the chart that represent the weekly cycle timing window when we would expect a cycle to trough and then for a move up into the rising phase of the next cycle. We believe that cycle trough has formed right here 2 weeks ago. Momentum on the weekly chart is shown with our proprietary reversal scout. That's this green and purple ribbon. And as you can see, momentum is positive. Switching over to the daily chart, on this one we have relatively long cycle brackets of 54 bars. Now the daily cycle timing window just passed is again shown with these vertical dotted blue lines, and this is the daily cycle low that we believe corresponds to the intermediate low from the weekly chart. You'll notice that First Solar has made a higher high in this cycle, tagged the 50% extension levels, now backing off a little bit from that level, forming a flag. We are expecting this support zone from 187.50 to about 181 to hold, and then for First Solar to move to the upside again, we're targeting that 61.8% extension at about 201. If it gets above that, our next level is the 78.6% extension at about 209.50. Momentum on the daily chart is shown with the reversal scout again and the slim ribbon, which colors the candles red, green, or gray depending on momentum conditions. Both of those indicators are green, showing positive momentum. So we're going to be looking at a bullish options trade idea, and to set that up, we're going to go over to the Tasty Trade platform. They are our preferred options trading platform. If you're interested in them, please go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade. That will take you to this page where you can learn more about them. And if you decide to open an account with them through our link here, that will help you with a special bonus, and it will also help us. So please do check that out. Here is First Solar over on Tasty Trade. Notice that the IV rank is sitting at 3.7. This low IV suggests a long premium trade idea, and we are going to use the June 21st monthly expiration cycle. Now, the option strategy that you choose will depend in large part on your account size. A long call around the 70 delta will cost you anywhere from $1,700 to about $2,000, depending on which strike you choose. And you will also have the disadvantage of negative theta, paying for the extrinsic value in the option. Now, to eliminate the extrinsic value, you could go with a zebra. That will cost you around $3,300. For those who would like to pay less for a bullish trade idea in First Solar, we can set up a call debit spread. First, we will buy an in-the-money call. Let's go about 2 strikes in the money and buy that 185 call. And then we're going to sell an out-of-the-money call to reduce our cost basis. Let's sell the 195 call. Now, this makes a $10 wide call debit spread. We are paying a debit of $5.38. That means that our profit potential is $462, which is the difference between the width of the spread and the credit collected. You can make your spread wider if you choose to do so. Now, this gives us a probability of profit right around 52%. We have just over 15 long deltas, and we have positive theta. That is our options trade idea in First Solar today. As always, you can reach out to me on Discord or via email to katie@askSlim.com if you have questions or feedback.
Okay, I was a visitor at the Tasty Trade show on Thursday of this week. It was a lot of fun. It was great to be back there. I felt like I was back home. While I was on there, I talked about what I thought were some of the best and worst stocks right now. So I thought about, well, so many people watch that. Maybe I should do that analysis and show you what I was looking at when I mention these particular stocks. I'm going to move through these really quickly, but we're going to get a good idea about how I'm applying our style of analysis and using our studies to help me with that. So I'm going to look at about 6 or 8 good ones and bad ones in here really quickly. And remember, our analysis is probabilistic, so we expect to be right more than we're wrong, but sometimes we are, of course, wrong. So we want to make sure that we say that before I show you this analysis. Let's start by looking at some of these Chinese stocks, which is what I was talking about when I was on Tasty Trade. Here we see, looking at Alibaba here, we have a bullish stock here. And what makes it bullish? Well, first of all, you can see in here that there was an inverted head and shoulders in here. What I want to quickly do is I want to put in that neckline so you can get an idea of where my projection would be right there. So you take the neckline down to the low point right there. And what I'm going to do is just going to duplicate that and move it up right over here. And you can see that the target is right up there based on the inverted head and shoulders, somewhere around 87, 88. Based on the projections in here and this bottoming that's going on, we could see it getting up here to 85 to 88, maybe 90 here in the next several weeks, and then having a kind of a pullback in there and then probably moving up again. So that's the projections up there in what is turning into a bullish pattern. Let's take a look at BIDU, which is another Chinese stock, and you see a similar occurrence going on right over here. So this one making its bottom in here, turning up. Problem is it's getting into the resistance areas right now, not showing quite as nice of a pattern as we see in Alibaba. This one's still good. We're looking for 120 to about 128 on the upside, and here it's now trading at around 110. And you can see that it is actually quite early in this upside move right over here. It's only about 3 weeks off the low, and most of these cycles, the rallies last much longer than that. So if we get a little bit of a pullback in here, it's probably going to be a nice buying opportunity. Let's take a look at FXI because this is the ETF for the Chinese stocks, and you could see this is just a super bullish look right over here. This is what we're calling the translation in here, where you had a negative translation where it peaked here on the left side of the cycle, came down, gave you this engulfing pattern right over here, and then turned up. Now you can see that the reversal scout right over here, which is a level 4 proprietary indicator, then turned up, and it has been bullish ever since. Here you could see where it turned down right there, and that's where you get this negative move there. So it's important to look at that. This looks to us like it probably gets up to this 78.6%, up around 28, has some sort of a modest pullback, and then moving up again into the summer. That's FXI. It's hard to look at this without looking at the emerging markets because it is a heavyweight in emerging markets, and this is a super bullish pattern that we're looking at. This is very likely to get you up here into these fib extensions areas. Let's look at, likelihood of about 44 or higher in the EEM. Again, this is very early, only 3 weeks into this advancing stage. This is the bottoming phase right over here, and then moving up. So EEM looking really nice there. We've been very bullish on the metals and especially on silver. This is Pan American Silver right in here, PAAS. Super bullish pattern in here. Still loving it. It's having a very big update today where it's up about 9%, just a huge upside move. And here's our targets right over here, 2140-ish or so. This is 23.5. And you can see the pattern in here. This is the cycle bracket on the bottom. This is pointing to the likelihood that there will be a correction out over here into sometime in July. So wherever it gets up in here, likely to pull back, we think that would be a good buying opportunity. So if you don't want to chase it now on the upside, and I understand some people would not do that, then the time to buy it would be in this pullback into July. You could see in here the reversal scout, beautiful upside turn here, led you all the way up. Look at the reversal scout, bullish, bearish, bullish, bearish, bullish, bearish. Every one of these turns it caught in here, and it's been positive right in here. So reversal scout, a level 4 way to see our momentum. And of course, we're having a great special right now on level 4. So we'll tell you about that a little bit later on. Uber, UBER is the next one. This pattern in here looks like it's super strong. Let's put that analysis up there. I love that it's coming back here into this support buy zone right there. Next few weeks, it's likely to make that bottom and then turn up. When it does that, the probability will be high that it then moves to a higher level over here. We'll target it at least 82, and then at some projection levels that we'll have after this bottom in there. So Uber looking like a fantastic pattern here. Look at the cycle patterns. This is a bullish configuration here, a bullish configuration here. As it dances up the 34-week moving average, that's the one we look at. We don't look at the 50-day or 100-day. We look at the 13-week and the 34-week on here. You can see on here the reversal scout still in bearish mode. We'll be expecting that to be turning up in there and giving us a bullish reading. NVIDIA, NVDA, the next one we'll look at. This one looks like it's completed in here on this cycle. Likely that what it'll do is get some little bit of a pullback in here. That will be a buying opportunity. We're looking for at least a move back up to that high at 975. Very likely going to get up over here to about 1050 in NVIDIA into the summer. So good looking pattern right there. And of course, the SMH, which is going to be very much like what we're seeing in NVIDIA. Same thing, getting down to the buy area. If it pulls back in the next couple weeks, likely to be a great buying opportunity. So those are the stocks that I think are the positive stocks in here, or the best ones or picked out a lot of the really good ones in our big universe of stocks that we do analysis on. Now let's take a look at some of the bad ones. I'm going to show you some weekly and daily because I think that's going to be important to this analysis. So let's take a look here as we switch over from that SMH pattern over to Caterpillar, CAT. Now, this pattern, this stock had a very good upside move, but see the reversal scout turning over here? You can see how much time is left with the ideal trough somewhere out early in July. The key thing on the daily chart is that this had a breakdown in here, and now it's moved up into the sell zone and likely to pull down again too. So the daily chart looking negative, the weekly chart looking like it's topped and likely to come down into late June or early July. To me, that takes a long-term bullish pattern and then says, well, there's some short side trade likely coming up in here. Overall, not that bad of a pattern though. Let's take a look at Boeing. Boeing has this massive megaphone that it put on right there. We've got some alternative, a cycle right in there is very likely going to find another way down over here maybe and test that low, or you can see the alternative right here on that blue dotted line that it actually made the low. Either one of those, likely to see it move back up to 200, but then very likely to get a big move to the downside again. Boeing is a broken stock, a broken company. The confidence in their planes is just diminishing by the day. So really bad overall pattern in here, and likely to try to get it back up to 200 again sometime in the summertime, but then probably lower again. Let's take a look at FDX. FDX is a stock that everybody has loved as it's attract its way on the upside here. But what we're looking at is the way this turned over right over here in FDX. You've got this bear signal, potential for a lot of time in there. And when you look at the daily chart, this is a breakdown right over here. So this cycle right over here has broken down. And what that is saying to me is that you're likely to get this declining out over here into late May. And then if it tried to rally again, this comes out into August. So Federal Express, I think, is a sell on any rallies. Starbucks, SBUX, is another stock that's a broken stock. And you could see this big decline there on earnings. If you look at the reversal scout right over here, it turned bearish 2 months or so before this downside break. And now there's still more time to the downside, looking for Starbucks to get to probably down as low as about $65 sometime in the next couple of months. So this is a very bad pattern, a broken stock. Talk about a broken stock. Tesla is a broken stock. You can see in here, there's the major or dominant cycle right over there, the big one, made up of minor cycles, 1, 2, 3. You can see that 1 and 2 right over here. So what's likely going to happen is that it'll get some upside in here, won't be able to get any real traction underneath this resistance sell zone area there, and then come down again. So we could see Tesla getting down to 140, potentially down over here to about close to 100. This, I think, is a stock that's in a lot of trouble. Upside attempts should be sold based on what the highest probabilities are. Actually, now turning negative in oil. We think that oil is going down to about $76. We get this downturn here in Exxon right over there. Look right over here where you got the downturn. It got slammed for 2 months. Here you got the downturn. It got slammed for 2 months. And this was the minor cycle, the dominant cycle coming down together. Here's your minor cycle right over here, which means that it soon bottom if it didn't, and then you're likely to get a rally to the upside, and that is very likely to fail and should be sold in Exxon. The last one we'll look at in here, since we're looking at energies, we'll look at XLE, and you could see that right here. XLE, same thing. You get this warning in here that the momentum has turned down. You see here where momentum turned down, went down for 3 months. Here where momentum turned up, it went up for 3 months. Here it's just turning down. There's a lot of trouble in here. And again, you can see the minor cycle patterns in here. They line up very nicely. There's a minor cycle low right over here. That says you probably get a rally out over here some point. That is very likely to be a sale. And we're looking for this market, the energy market, to overall be in some trouble as we get through the rest of this year. That is a look at the best and worst stocks I talked about earlier today on the Tasty Trade Network, and I wanted to give you that analysis so you understood how we did it. Our 4 analysts here at Tasty Trade at askSlim, not at Tasty Trade, will present the same way as I do. We're all experts in cycle analysis, and you get a good sense for that right there. That is the best and worst stocks, or some of the best and worst stocks. And remember, this analysis is probabilistic. Some of it will probably be incorrect. Announcing a special trial for our Level 4 top tier membership for first-time subscribers and for members that upgrade. This is a 1-month non-recurring trial that you're going to get 37% off. That's a regular $159 a month, but now only $99 for that first month, non-recurring. So you can sign up or upgrade for the Level 4 membership, and you will also get our premium version of our market condition monitor. You can go to askSlim.com and you'll get more info by clicking that Learn More button. Take a look here at our MCM. This is an amazing application that we have that you can toggle your own style of trader in here, whether you're a short-term trader or all the way out to a longer-term holder. There's over 115 symbols in here for the most widely followed stocks and ETFs, and you're going to get notifications when things change. You can see here there are trade setup conditions, and you can toggle in here, and it gives you the conditions for our very important reversal scout and slim ribbon. And again, you could be notified on that information, and the change log in here that tells you when things are changing in that specific time frame. So this is just an amazing next level proprietary momentum analysis technology. Just incredible, and this is included with that Level 4 membership. Also, things that are included, you get our entire focus list of charts for the Thinkorswim platform. You can import, you can save, view them live on your own platform, and then you will get our proprietary studies, the Slim Ribbon PO, Reversal Scout, Market Condition Indicator, Option Bias Indicator, and more. You can put those right on the Thinkorswim platform. And you will also get our entire grid archive. These are our custom chart grids with our best indicators. Just fantastic what you will be able to get with this great special membership. And there are support resources, exclusive free webinars, chart analysis and trade planning webinars, Q&A with the askSlim team on Discord for best practices for utilizing the askSlim custom charts and studies. Just a fantastic amount of information and support for you. And again, the full membership access to the MCM Premium and everything else on our site in levels 3, 2, and 1. It's an incredible wealth of information that includes Future Speak Show, our huge library, video library, of which there are more than 250 evergreen videos where you can learn a ton about your engagement in the markets. A special 1-month trial, just $99, non-recurring. If you want to continue, that's fine. We'll be able to help you with a special for that. In the meantime, this is the way to really get started to get all our full information. Go to askSlim.com, click that Learn More button up on the top, or for more information, write to Matt at askSlim.com. Stock market analysis and projections on the S&P 500. But first, I want you to read this important slide. This tells you about our analysis, how we approach our analysis in the markets, and what's important when you use our analysis for your own purposes, and always the importance of trade ownership. You must own your own trade and not look for anybody to help you get in or help you get out. Stock market analysis, S&P 500. We're going to look at cycle analysis and SPX and show you our projections in here and the changing things that have been going on. And I'm going to show you our proprietary level 4 studies and our market condition monitor. So Market Condition Monitor is a fantastic app, and that's included in our level 4 membership, the premium version. You will see that. You just saw the announcement on our special we're running right now for level 4, and please do take advantage of that and get this MCM. So let's take a look now as we switch over to the charts. So this is the chart of the S&P 500 SPX. I'm going to show you first the weekly analysis in here. And you can see now that we're showing two different projections in here. Now, when you look at these two vertical dotted lines here, this gives you the time frame for the expected trough or bottom in the cycle. Let's just blow this out a little bit more, and you can see the cycle right here, and right here, and right here. And that those cycles in here are broken up into a dominant cycle of 28 weeks and a minor cycle of 14 weeks. And those are the average time frames in here for this particular symbol. Every symbol has its own cyclical periods. You want to learn more about cycle analysis, go to our workshop tab, and there's a free video in there, and you'll be able to begin to learn about cycle analysis. So let's go back to this cycle right over here. And we had expected that the decline would come over here into the time frame of late May to potentially early June. Now, with the market rallying as strong as it has, then that says to us that there's a pretty good likelihood that this low at worst will get tested and potentially the corrective period is over. Now that was a 5.9% loss. We expected it to fall down to the 23% right there, to the monthly 23% right there. That was a prediction of a very shallow correction. And I said that all along while we were looking for that it would likely be quite shallow and that you would not see what a lot of people look for is 10% or more in a correction. It's just not what we saw here. The reason for that was because of the duration of this advance. And you can see in here where the reversal scout was turned up here and was bullish and continued here, and then turned down over here and told us, well, that correction we were looking for was on. It only fell 5.9% and then gave you this big rebound. It's amazing how during this period of this bull market, which takes you way back over here to 2022, it's amazing how these V bottoms have come in here. And as soon as the decline was over, buying came in extremely aggressively. Now, I had talked about the fact that there were time periods where you had rallies right over here and here, and there was one more decline to come. This rally is stronger than any of those I talked about after that low, and now has gotten through what I'll show you is the 78.6 on the daily chart. Also, you see I put the slim ribbon in here for you to see, which never turned negative in here. It's been in a positive configuration the whole time. Reversal scout is more sensitive, and we tend to use that on our weekly charts because that gives us a good handle on the cycle periods. We can see that as it moves. So this low right over here that we see really looks like in the low that we were looking for. Now, some people would say, sure, Slim, you said it was coming out. The decline was going to come again. We were going to get to lower lows and it was going to come out into May. Well, that was the highest probability. But right now, those probabilities are changing, and our analysis is probabilistic. We have quite mechanical ways that we look at that, and I'll show you that in just a moment. So now the projections which we had for June, July as periods of strength are the same. It just looks like it started earlier, though there is an opportunity for one more pullback in here that we would expect. But now we see we have a test in here, and kind of the worst thing we think could happen if it fell through the end of May or the beginning of June, that it would be only a test of those lows and it would begin to go up again, or that low is in place and that rally is already going. Now, the upside projections are right over here at 53.95, so let's just say 5,400, and right over here around 55.30. Now at 55.30, you will be at historic market cap to GDP percentage. It'll be 200% or just a little bit more. If it were to get up to that level, it would be very likely there would be a very severe downside reaction. Even at 5,400, where you're, let's say, 195% of GDP, you are at historic levels, and that tends to bring significant selling. And I think that there's a potential for this next rally into the summer to be the end of the bull market. Well, we will see as we get later on in the year, and there'll be levels that we will have that will give you that will be breakdown levels, that if the market does fail early, then we'll get some sense that it is the bull market is over with. And I have always believed in here that this was a secular bear market, or the formation of a secular bear market, but we were now in a cyclical bull market that I thought would last well into later into 2024 and potentially into 2025. So that's what we're looking for in here, a potential of another pullback. Now, let's go to the daily chart in here. This was the analysis that I had, which was that it would likely be getting up into this level and reverse and come down and get back down under this low, or even down to that 8% level on the downside right over there at 48.25 or so. That was the analysis as it was before you got through these levels here, which was the sell zone right there. So when that happens, we have a very mechanical way to react to that because it's important information. And you can see in here the slim ribbon PO, which did turn negative in here and brought you just the end of this sell-off in this choppy period there, has now turned positive again. So we're getting our indicators turning positive. Our market condition indicator has turned positive. Our option bias indicator has gone neutral from negative, and the slim ribbon and slim ribbon PO has now gone positive. These are positive indications. And when you get that and you move through the repair level, which in this case was 52.01, then we have to revise things because it's giving us a more bullish indication. This is what that looks like right now, based on all of the new information that we have. And that is that the downside pressure that was coming from the weekly chart. Now, let me just go back to the weekly chart. That was this right over here as it was correcting, that is dissipating. This is starting to curl up. And the fact that you could get up through that 78.6% tells us that that pressure from the correction from the longer time frames is now disappearing. It's dissipating, or else you couldn't get up to this level. You would have had another cycle like this. But now it tells us that the upside movement in here, the magnitude of this, and now the duration of this advance makes it likely that while you're probably going to get some correction in here, it's not likely to get back down to this low. So this area over here becomes a buy pending area for that period into the summer, that next period of rally, which starts really out in June once this pullback comes. So it would look something like this, where this rally would then turn up somewhere in there and make that trough in there. We put in this, we call it like a slim cloud, because we have an upper and lower channels that we put in there, and then it essentially is dynamic. It moves as the market tells us to move it, because we want to get the best understanding of market conditions and the highest probabilities. So while the market was down over here, the highest probability was that it would, play around in here and then move down again. Once it moves up through the 61.8 and closes over the 78.6, we remove the sell zone because it's no longer a high probability, though it's pretty likely that there will be some correction going in here, and that offering a buying opportunity. So hence that says buy pending right over there. This dominant cycle, which now is grayed out, is because it's losing its influence that we have in there. While it still likely is going to bring some pullback into this area, that support zone right now is 51.06 to 50.47. If it was to get under 50.47, then it would probably get down and test that low that we expect that we expected before, but now is less likely. So again, support levels right over here is the 5103 to 5047 area, and this is really where I think the highest probability is. If we get a pullback, it will offer a decent buying opportunity for that next move to the upside. Again, looking at the side by side, this corrective period that we had right over here now looks over. We need more information to come to us to be sure. One would be the reversal scout turning positive on the weekly. Then I would know for sure that the downside pressure from the longer time frames had dissipated, or finishing this cycle in a positive configuration where it ends above this level right over here. That would then tell me also that the pressures had gone from corrective to where the buyers really are in command. Not quite enough information for that right now, but things are changing. We expected that the summer would be a period of strength. This bottom came a little sooner than we expected, though pretty much in the range of the magnitude of decline that we did expect. So that is a look at the S&P 500, and again, looking for a rally in the summer up to the 5400 to 5535 area, and once it gets into that area, it will be in a period of extreme risk based on valuations. Not that it isn't already when it's trading around 187% of GDP right now. So it's already super overvalued. And to call for an extension of the bull market right now that is only going to be a couple hundred more points is really not looking for a large percentage gain here, though I do think it will be with an upside bias. Let's take a look here as we look at our market condition monitor in here. This again is included with our level 4 membership, and you can get that for only $99 non-recurring in our new special that we're running right now. Everything that we have will be available to you. So let's take a look down over here as we look at the trader. There's a trader or a time frame version in here, and I have it set to short term, but you could look at intermediate, near term, intraday. All of that is our built-in algorithms on here that really help you understand the conditions of the market. So I'm looking again at the trader version, and let's say I'm a short-term trader. So that would be, I'm looking at a lot of things that, in the daily and 2-hour time frames or 1-hour time frames. That would be really what fits. And you can see in here that this is May 10th. So the beginning of the week, this had turned from neutral to bullish. Same thing over here, a neutral to bullish. This that's the S&P and the QQQ. The IWM turned bullish back on 5/3, so that was more than a week ago. And the same thing here for the diamonds on 5/6. So this turned bullish. If I look at the intermediate patterns right over here, you will see that in the intermediate, these are all turning now to slightly bullish from what was bearish, and that's telling you the conditions, how they're changing. That's another reason, looking at our algorithms in here that are made up of our proprietary indicators, that this is a good reason to believe that if the market were to pull back in this time period we're looking for over these next couple weeks, that it probably would not be able to go down that far. So you can see that if you were if you were an intraday trader, you could just set this to intraday, and you would be looking at down to 3 minutes, and you can see in here that the IWM intraday today is the most bearish. This is in line with our day trader app, which is our day trader service, which is unbelievable, showing right now that the weakest index for the day in here is the IWM. So if you were what we call a near-term trader, which would be kind of an intraday swing trader or a couple-day holding period in there, it would show you in here the changes. And you can see the mixed market in here now. IWM is still pretty bullish. If you wanted to look at the time frames in here, you could look at it right here, and you can see the SPY and the DIA. and looking at that on the 2 hours right there, or you could look at any of these time frames right there. Pretty amazing. Let's just look at the daily, and you'll see the dailies, even though the market's pulling back right now, intraday, these are all still bullish. So if I look at the 2 hour in here, these are basically mostly bullish, though the reversal scout, which is more sensitive, is showing you the QQQ, and the IWM is the weakest of those indexes there. So let's go back to the trader version. Let's look at short term, and let's just look at the trade setup conditions, and we'll just look at the best and worst in here. You can see and hear that what the best 5 or so are TMAS Silver, China, Silver, PAAS, FCX, Copper. You can see the things that they're buying on here are not really the most bullish, but let's look at are not the most widely held. And money is moving into the metals, as you can see right over there. Let's just scroll down a little further at everything that is very bullish, and you can see that copper, Amazon, GDX, CVX, Newmont, PPLT, XLP. Wow, that's very bullish. Italy, Amgen. Look at all the things that are very bullish in here. Costco. These are all short-term. Morgan Stanley, EMU, very bullish, and Goldman Sachs, XLU, which has been fantastic. And I'll give you a little warning about XLU, and that is when historically when XLU gets extremely strong, and it's up like 6% for the month, that is a precursor to some weakness in the market, because it says that money is moving into more defensive areas. So we're just going to keep our eye on that, because we're basically saying we still has time for the market to go up, and this isn't a timing indicator. It's just a little sentiment indicator that says watch out, there may be a message in there. Go back and look to where XLU surged before some of the big market breaks, and you'll see what I'm talking about. So these are the very bullish. Let's just see the ones that are bearish, very bearish. You can see Shopify is very bearish, and there's not much very bearish now because the market got strong, but there are a lot that are in the bearish category that you can see right there, and that's it. I'll stop right there. And those are the ones that are bearish, and one very bearish. This is an amazing application in here. I just love this. And you can, do the same thing for intermediate term or for any of the time frames in here. So I love this intermediate term. I was saying yesterday when I was on Tasty Trade that Starbucks was one that I thought was very bearish on the cyclical patterns, and you can see it showing up that way here. Also intermediate, because it's a really super weak stock. So wanted to show you that. That's a look at the MCM. This is a look at the S&P 500, which we believe some modest pullback probably over the next couple of weeks, and then getting ready for probably a stronger June and July. And if it sets up anything different than that, of course, we will be on it and watching it and letting you know, because everything we do is about watching the market, finding the things that are the highest probabilities, and sharing our analysis and education with you, because your success is our success. So that is it on the look at the S&P 500, the stock market for this week. Don't forget, you can take advantage of this amazing special. We have only done this once before, some years ago, where you can get everything basically we have, level 4, level 3, level 2, level 1. You sign up for the level 4. It's non-recurring, only $99, and you will get all of our analysis, everything that you see on here, our MCM, premium, and everything that's in level 3, 2, and 1. Go to the askSlim.com website, click the Learn More button, and you can then get this non-recurring level 4 membership for only $99. And if you need more information, write to Matt at askSlim.com. That's it for today. Please do go to our website. If you're brand new, the best way to really get a sense for what we do is to sign up for level 1. It's just $45 for 3 months. On YouTube, subscribe to our channel, click that notification bell, like this video, give it a thumbs up, and watch our member videos in the playlists and past shows. On X, follow me at askSlim, and any questions you may have, write to Matt at askSlim.com. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm